guys, this is Multifamily Investor Nation webinar this morning. Wait a couple more minutes to let some people jump on. If you're already on, let's tell me a little bit about where you're jumping in from. Are you local? Are you out of state of South Carolina, out of South Carolina? Where you guys tuning in from? Just put it in your chat. There you go. Demetrius from North Carolina. I'm gonna try to say it. Saif from Fort Washington, Maryland. Glad to have you guys. Somebody from New Jersey. Y'all bear with me on this Southern accent this morning. All right, Philly, all from the Northeast. Me and Demetrius carrying the Carolina twang. But glad to have everybody here. We're going to go ahead and get started. We got a good group here as participants in this webinar. It is recorded, so for a lot of you guys that want to rewatch it or watch it afterwards, that's great too. But my name is Kelli Garrett. Today we're going to talk a little bit about how to deal with private lending inside your multifamily business and how to elevate that multifamily real estate business through lending. So, well, I want to be able to click through there we go. I want to explain a little bit about, because the way I work is in pictures. So being able to see something. So obviously you guys, a lot of people on here know PassiveInvesting.com, know Dan Handford and Danny Randazzo. And they're my partners inside this lending arm. So PassiveInvesting.com has 5 different legs to its business. Of course, we have multifamily. That's where it all got started from. Storage, car washes, a hotel, and we have a lending arm in PassiveInvesting.com. So I hope that explains a little bit about how lending comes into multifamily inside PassiveInvesting.com. So I am a partner inside the lending arm here at PassiveInvesting.com. A little bit about me. I'm a managing partner of Rehab Wallet. I got over 2 decades of lending experience. So been around the block a few years in this lending world. Flipped for over 18 years myself. So I was an active flipper for 18 years. We kind of opened Rehab Wallet, and I'm gonna explain a little bit about our lending arm, and I hope that you can understand and see how you can input inside your lending business or inside your multi-family business just by cheating off us as a template. I'm also a LP and a GP investor inside most of those legs at PassiveInvesting.com. But I flipped for almost 18 years, so we opened Rehab Wallet through the lens of a flipper. I live in beautiful Charleston, South Carolina. Been married for a little over 23 years. I'm going to tell you a quick story about how Rehab Wallet was formed, because as some of you are entrepreneurs on this call or on this webinar today, and it's funny how businesses and things get started, right? Danny Randazzo and I are great friends. We live about 8 minutes apart. Instead of calling each other on the phone once or twice a week, prior to us starting Rehab Wallet, we would get together and just walk and talk. We kind of called it our dream walk, because that's kind of the way entrepreneurs go, right? So we were talking. He asked me one day, he said, how is your private lending business going? How is that going? Because I was private lending in addition to running my real estate business. And I said, Danny, I have the phone ringing off the hook, but I'm out of money. I had sold off a good chunk of our portfolio, and I had a bucket full of money, and a few $1 million only goes so far in the lending world. So I was out of money personally. And so that day on that walk, Rehab Wallet was formed. We discussed that if Dan and Danny and PassiveInvesting.com can raise the capital, I can lend it out. So it's been a good ride. It's been a fun ride. And now we've been in business now right at 5 years, June will be 5 years. So that's a little bit about how Rehab Wallet was formed and how funny things end up if you're just talking to another entrepreneur and you want to, you know, partner up and do some business together. We use a debt fund to lend out of. Now, what is a debt fund? You know, lending is just the debt instrument of this fund that we raise capital inside of. There's, you can raise money in a fund and buy and arbitrage stocks. You can raise money in a fund and buy businesses. We choose to raise money in a fund and lend out of it and arbitrage that capital. You know, on our multifamily deals, those funds are closed, meaning if you're going to go buy a multifamily deal at 123 Main Street, you open a fund, you raise the capital, and you close the fund once the property is bought and sold. I mean, bought and closed out. Well, inside our debt fund, it's an open fund. So we're constantly raising money every single day. Our collateral is collateralized over all the loans in our portfolio. So it's a very conservative fund. Our debt fund and most debt funds pay a fixed income to investors. We're going to go over that specifically and how we tier it in a second, kind of let you have some ideas. We distribute distributions out monthly, not quarterly. We do that monthly. We allow a compounding feature inside the fund. All this available for everybody to do. But the compounding feature looks like this. Like let's say an investor doesn't need their distributions to live off of on a monthly basis. We let it stay in and allow that money to compound monthly. We also have a 90-day liquidity option. So, and what that means is that, like, you know, life events happen. Investors want to be able to pull their money out if needed. Life events, taxes, weddings, anything comes up, and it's just I always call this like a high-paying CD, right? It's a conservative place for our investors to place money. It's very liquid. It's not stuck in a multifamily, let's say, for 5 to 7 years. And they can get distributions out monthly. Here is how we tier it. Everybody does it a little differently, but we pay a lower percentage if you have a lower amount of money in. So 25,000 to 100,000 is 6%, and we pay up to 10% for people that might want to make put more money in our fund. All right. Once again, I've talked about the debt instrument out of our debt fund being lending. So I'm going to go over as fast as I can the 5 pillars of lending. And it's really just lending 101. First of all, you got to go raise the capital or have the capital. Some people's capital sources is a very large line of credit. Some people's capital sources is their own money. We raise capital from our investors, and because passive investing has the other legs of the business, multifamily, storage, car wash, and hotel, we have investors, you know, and let's say we're not buying multifamily, car washes, hotels right now, right? So we're not buying because of just the rate climate, the equity area, the environment that we're living in right now with debt. So lending gives us a space for our investors to still be able to invest and at the same time give them some cash flow. So the 5 pillars of lending is that: raising capital. We got to go and find the borrowers to originate loans to. We then have to process a loan, servicing a loan. And then you got to deal with it once it does close, because there's a post-close piece of lending. And we're going to go into each one of these areas real quick. Raising capital. Obviously, a lot of you guys on this call know how to do that. You've been doing this for your multifamily deals. It's the same vehicle and the same exercise as you would if you're raising capital for a multifamily deal. It just might be a little different piece of your investors' financial pie. This is a very conservative pie, piece of their money that, because they can touch it, they can get it back out if they need to. Whereas they might have a larger sum of their money that might be more of a growth situation, but it's locked up for 5 to 7 years. But raising the capital is done the exact same way it would be if you're raising capital for a multifamily fund or a deal. You got to market it. You got to be on social media. You got to sponsor events. Wherever your investor is, Dan Handford spoke about raising capital a couple months ago on the MFIN webinar. And he talked about going in places like a venture capital meetup. And I thought that was interesting. It was like going to places where your investors are. No, we're not a VC, but that's where our investors are. They have money to invest. So we're going to go to places and sponsor events where our investors are. Networking, real estate investment groups. Not only are they our borrowers, but they're also our investors there. So we're constantly networking at places like this. Speaking, podcasting, webinars, and stages, any way you could actually promote your business and you're raising capital is where we want to be. Raising capital is the key to scaling this business. Loan origination. It's the exact same process, the exact same exercise as it is on over there on the raising capital piece. It's the exact same thing that we do. We sponsor events, but we go to where our borrowers are on the origination side. We're on social media. We're going in part of groups where our borrowers are. Now, your lending situation could be, you could pick anything from commercial, office, retail, industrial, to single family. Our lending arm tends to lean towards single family. I told you that I flipped for almost 18 years. So it came very natural for our culture to be wrapped up in the founder, right? So that's the groups, the congregation that I'm used to being around every single month. And so we sponsor a lot of those events. You can lead one. There's a lot of REIAs, REIAs, real estate investment associations in most every town and city that there is. We sponsor all those events. Want to be behind the microphone to tell a little bit about what Rehab Wallet is all about or what your company is all about. We're going to network, and we're going to speak on as many stages and podcasts and webinars as we possibly can, telling everybody about what we have in our loan terms and our interest rate and what we do differently than everybody else. So just like, it's kind of like sales 101. Obviously, if you saw the other slide was all about raising capital. It looked the exact same thing because all this is just sales. So once we actually originate a loan, we send out a term sheet. It looks as simple as this. Of course, we redacted a lot of the information here. But the term sheet expresses, and your term sheet will express the purchase price, the rehab cost, the interest rate, and the monthly payments. So before we move forward, this term sheet is sent out to our borrower for them to sign via DocuSign. So obviously you can see this interest rate. Some people might think that's high, some people might not. Now obviously I can just give details from our past experience. We've almost had 5 years in June. Rehab Wallet's been formed. Our lending arm has been formed. And there's a lot of people out there, almost 2,000 of our borrowers, of course, that's how many borrowers we've closed so far, have accepted these terms that are very similar to this. And you as a multifamily real estate investor and looking to kind of elevate it or add to your multifamily business, you have to arbitrage that capital. So you have the cost of capital at 8, 9, 10% interest, and you're lending it out at 14 and a quarter or 14. So if you're just lending out at 10%, you're making no money, right? So you have to, increase the interest rate to go in line and in tandem and in sequence of what you're able to pay out on the capital raise side. And guys, just as I go through it, if y'all have any questions, please, just as a reminder to put in that chat box, and I hope to answer them at the end. Processing. The objective here is that the lender and the borrower gets to the closing table. That's the main objective as the processing team. The processing team is a very detailed seat in the business. They're the ones collecting all those documents. And you will probably do the same thing for regulation reasons, but we do all loans in an entity name. So we're getting all their articles of organization, their operating agreement. We're going to get the scope of work from their contractor. Of course, insurance. Then this person inside the processing department, or you as the leader, whoever's wearing all the hats, you work with the law or the law office or the title company to prepare all the closing docs. And the ultimate goal here is to get clear title, because we're not doing any loan on clear title, because you will get lender's title insurance, as well as the owner probably will have their own title insurance. We're going to prepare a mortgage. This department will prepare the mortgage, the deed of trust in some states, promissory notes, etc., and send it over to the law office for them to sign. So the processing team is very, very, very detailed. Once again, I'm going through the 5 pillars of lending. Then we got 2 more. Servicing. Once the loan closes, we then have to service the loan, which means you got to collect all the payments. And it isn't at all times that these borrowers are, not everybody's timely, right? So you got to know how to handle delinquencies. And what happens if they go in default? You got to be ready for that. At Rehab Wallet, we, and I keep saying Rehab Wallet is our branding name to our borrower side, our borrower facing side. That is not our entity name. That is our branding name, Rehab Wallet. Our fund is called Passive Investing Club Fund. So PIC Fund 1 is the entity name, and that is our fund. And our borrower side is called Rehab Wallet, and that's just a branding name. But we have to handle defaults. Things happen. And so what happens if you do have some? Because you probably will. Death, divorce, all the D's, disability, anything that could possibly happen could happen. We've had, like I told you, we've had almost 2,000 loans go on the street, I call it, that we've closed. So things can happen with these individuals, life events, and how to handle that. If you get one back, if you get a deal back, for some reason it doesn't sell at foreclosure, because every state will have foreclosures and foreclosure laws that you need to understand. New York is different than South Carolina. South Carolina is different than North Carolina. Every state is different. And so once you do, let's say they are delinquent 9, 3, 6, whatever months, how long ever they're late, right? We only let them get past the 30 days late. They actually get a letter that escalation letter is what we call it. And then on the 60th day is when we start the foreclosure process. So they can stop it, but we have to get started on it because some states take a long time to deal with. And let's say at foreclosure, once it gets to foreclosure and a foreclosure auction, weirdly today, Tuesday, is the Charleston County. We're in Charleston, South Carolina. So it's Charleston County's auctions going on right now at 11 o'clock. So whatever gets sold there, our full payment, back interest, attorney fees is what the amount would be listed at. If we don't have anything on this docket, but if we did, that's what we get paid back. So we want to get paid back in full. But what happens if somebody doesn't bid and we had to take it back? Well, you got to be ready for that. Like I told you, I flipped for 18 years. We just would start an REO division, a real estate bank-owned division or something. we would start that and have to rehab it ourselves. That's just that you have to be prepared for that. But that's part of your servicing. The draws are a big deal, right? When you're handling a loan amount, when it's time of closing, you do not give them all the rehab funds, right? We got to go pay off the purchase price, but you want to maintain the rehab funds and deliver those out in draws. So once they have done the floors, the HVAC, the roof, they send you videos, pictures showing all that's been done. Then utilizing and using your scope of work that the contractor sent over, you see that the floors were 5,000 planned, roof was 6,000, floors were 4,000. You then submit $14,000 out to them in a draw. Okay, so that's what servicing's all about. You got to be prepared for that. The last one would be the after it's closed. Well, compliance piece comes first, but the compliance piece, you know, there's times when an insurance company will just cancel insurance on somebody for whatever reason. We are notified because we're on the insurance documents as a mortgagee. And so we get notified via mail. It's still very old school snail mail, but we get notified that the insurance has been canceled. The compliance department has to ensure there's insurance on a property at all times. Has the taxes been paid? Right? Let's say that we typically, Rehab Wallet typically does 6 to 9 month loans. But what happens if it goes over the 9 months? They can, with an extension fee, extend it, and now it's out there for a year. So we have to make sure the taxes are paid. We don't escrow, just like, you know, your traditional world, maybe in your primary residence knows about, you understand that, but this commercial side and business purpose lending does not escrow. So we got to make sure the taxes are paid. Then after the loan is closed out completely, we have to save the file. So you got to have a filing cabinets for these files just in case something else comes up with it. So we've learned to save for about 3 months now. And then last but not least, you have to satisfy the mortgage. You have a mortgage as a lender on the deed. If you don't satisfy that once it's closed out, now when he or she goes to trade it again, your mortgage is still showing. So satisfying a mortgage is literally just a piece of paperwork, and your closing attorney can do that. Y'all, lending is just one way that you can elevate your multifamily business. You know, not a lot of multifamily deals are getting traded right now. We all know that. So this could be one way to keep investors and create some cash flow during this time right now when the rate climates and the rate environments allow us to trade multifamily that much. This concludes this webinar. A little bit about lending, a little bit about how to elevate your multifamily business through lending. I want to answer, I'm going to breathe for a second and drink a little water. And I want to see if anybody's got any questions. And I'll answer them for the last maybe 5 minutes. See if anybody's got any questions. And we'll take this one real quick. What happens if we get a property back? Well, I talked a little bit about that. If every state's got foreclosure laws that you have to ensure and understand. You know, in the state of South Carolina, that it has to actually be in the newspaper for 6 weeks. It has to be out there that this property has been foreclosed on. So that any other creditor can come back. So there's 6 weeks. So if he's late for 2 months, then he's got 6 weeks out in the paper. Then he has to be served, which takes us out. We're typically 4 to 5 months, even in a pretty friendly foreclosure date. So you have to be prepared if someone forecloses, because it'll be 5 to 6 months. Some states are, we don't really put a lot of business in Florida because the laws take so long there to foreclose. So be real careful about that when you're doing that. Any other questions? Any other questions anybody might have before we close it up? I hope I answered as many questions as possible through webinar. Obviously you can see my email at the bottom. The QR code is right there in the middle of that little house on purpose. What we do is that'll take you straight to rehabwallet.com. Anybody that has loans clicks the borrow tab, and you can input the deal there on the application. So your website is very important. We did this so that you could see the website. If this is something that you guys are interested in and doing, that you can kind of, use this as a template. We've been super successful at it so far. We work very hard at it. It needs to be a place where you can spend time. It's not as easy as everybody thinks it is, but it is a place that your investors now, you have another tool in your toolbox to give to your investors, so that your investors has other ways to invest with you and stay with you along the way until another multifamily deal comes up. Guys, I'm Kelli Garrett. Thank you for your time. If you've got any other questions, please feel free to email me at any time. Okay. Take care. Thank you.